Hi guys, happy Saturday. So the 11th of April today, and I would like to give you an update. I missed the update yesterday. I was driving around quite a lot, and so I didn't have time. Had time to trade though, and I will talk about this in another video. One prop firm wants me to trade a live account with them, so it's quite funny, and I would like to give you an idea about that as well. But I would like to talk first about the markets. What happened there. And honestly, today is a day I'm a little bit proud of myself because I think we caught it very well. Okay, so I normally start with the Nasdaq, but the swing trade I initiated was on the S&P. Okay, overextended demand zone or here and then becomes supply. That's always the same structure I'm trying to understand. Okay, so supply and demand, resistance and support, that's basically the game. And then from a support and support zone, understanding the dynamics, if you get momentum and so on. Okay, so what have we seen here is that we formed where is it? Here it is. We formed here a kind of a sideways range, and it's not the most beautiful range here, but overall that's the kind of range with demand and also supply. Okay, we had supply here at the 7,050, 7,080 level, and we had demand for it here at 6,820. Okay, that's the overall idea what happened there in 4 months basically. Right, this started early December and kind of we left that range to the downside mid-March. Okay, so that's the overall context what I'm talking about. We had demand here, and if we understood that there's a range to trade, there was a lot of opportunity. Okay, and I think it was retrospective okay to trade. There were some dicey moments, especially here this Friday, for example, the 6th of February, massive sell-off. The market really was trading below the zones, and then the market participants jumped in here on the 6th of February, trading up heavily. Kind of had the taste there that we can make new all-time highs, but overall, no, we did not. And we formed kind of here a really significant supply zone here in this red kind of area, especially here. I think especially that we had here the case that we formed lower highs. Okay, so we formed lower highs here. So basically this was actually the start of a downtrend, and it held. And and this basically after the start of the downtrend, we had a trend acceleration to the downside. Okay, and I think we understood it quite well that in the bigger picture we traded into this demand zone here. Yeah, and have recovered since then, and that's kind of the game, right? So that's kind of the game. My overall opinion is that this could be here a major top. Okay, so I think that this could be a major top here, and when I mean major, I think major in the context of a long-term turnaround. Okay, I'm not saying that we will go to 3,000, but I think that we will go to this 5,500, 5,600 area. In my opinion, we will go there. Okay, so I think that this could be a major significant high and the turnaround for something bigger happening. All right, so having talked about that context, I would like to say that overall we had been overextended to the upside here. So we recovered this kind of Iranian global shock, and as the markets normally do, they try to overextend. Okay, and what was quite clear was this supply zone there, because again we had the demand earlier, and then we traded into this, and we formed here and here. Then I would say this kind of major supply, and that's the reason why I timed it like this. But that's not all, and I would like to talk a little bit about intermarket correlation in the next step. Okay, so this level, or to pick this level, is not just a coincidence. It was the reason because I look at the other markets as well, especially the Dow and the Nasdaq, because Dow, Nasdaq, and S&P forms one overall bigger picture for me. Okay, so analyzing one market is helpful, but if you try to combine all three into one picture, you get a good understanding. So next step, I would like to talk about the Dow. Okay, the Dow had a clear downtrend, and here we formed initially this shoulder formation. Okay, and the shoulder formation is a pattern, a chart pattern, which tells us that there is opportunity to the downside, and the neckline was here. Okay, the neckline was this red line. We broke that, and then we broke that support, and then we went lower. Again, I think we caught it very, very well here, area of support. I always said though as well, and this was kind of in my mind as well, will we be able to kind of lift at some stage to recover? Yes, for sure. And let me just check what I forgot the trend line, what I had in place there, but I think it was something like this. And I said easily we can recover there, and then we will again go back to our downtrend. Okay, that is kind of my play. So what did we see? We, in the bigger picture, we tested this support zone here in red. Okay, so check. Okay, check. We went down there, so everything I would say goes like plan. Now let me just look for this here. Arrow up. So this was expected. Worst case scenario was down here, by the way, and I still think that we will go there for sure. Okay, so this 41,500-ish, we will go there. That's kind of my opinion, kind of what I'm anticipating as well. All right, so what we had is, hey, we had the check here, we found support here. This is an area it was expected that we get a reaction. Okay, what we do understand is, will we get a reaction? Check, yes, we will get one. This is expected. Will this hold forever? We cannot know. Okay, because again, what we've seen right now in the last couple of weeks, global wars, global dynamics, it's hard to really to understand what's happening there. But what we knew is that there was here a supply zone, and it was quite clear that if this supply zone breaks, that we get dynamics to the upside. Okay, so initially the trade was that we will test this area, and if we go above, then we have to basically check. The principle though is the same like before. We had supply, we had demand, and demand becomes supply. Okay, and that's kind of why this level here was quite important for the timing of the S&P short. And I hope that the picture now becomes a little bit more clear, because this area here plays very well together with the trading behavior of the S&P, because we have reached here in the Dow the high, and there we had then the next day the kind of small selling coming in, which helped though to find supply here in the S&P. The Nasdaq though is very, very close to this supply zone, or we reached probably already the supply zone here on Friday as well. I think that this is now becoming very toppy as well here in the Nasdaq. Okay, so when we look at this again, this is the bigger kind of supply zone. What we have here: demand, supply. Okay, can we time it by exactly 100 points? Most likely not, to be honest. Okay, and I think that's it will be tough to really time it by 50 points at least. But what we can understand, that this is already pretty much extended, and that's the reason why I did not take the trade in the Nasdaq. That was the reason why I took the trade in the S&P, because it was then more clear. So that's kind of the play what I have right now, all going on a swing basis. The stop is about 35, 36 points. Likelihood that it will be stopped out is high, but if it works out, we will get about a 5 till 7 reward risk, and then this can pay for a lot of pain. Okay, so that's kind of it. Russell also is a kind of the same picture, and this is the beautiful thing about trend lines, right? So bam, we had the trend line test here already. So the Russell recovered quite a lot. So this could also be an alert sign for us for the short, by the way, if the Russell really is able to establish itself above it and even move higher. Okay, so if this happens, the short would have already a bad taste. When we look at European markets, this kind of confirms my I would say my opinion about this. This gap here in the what happened there early of the week is too big to maintain in the longer term picture. Okay, so we got right now what will happen is there's just two ways in my opinion. Either way, we can hold here and try another attempt to go up, or we will close that and we will go down. Okay, in my opinion is we will rather go down. We will test probably again 22,500 in the DAX. S&P Euro stocks a little bit of different picture, but still we are too much high. You know, we went too fast high, and we will close that gap. It's too significant. Okay, it's too significant here, the gap as well. And I would like to show you this gap in the Nasdaq. Okay, and the Nasdaq gap, yes, there are often gaps, but in this case, it's a gap which is still open of 500 points. And let's see if we have a gap indicator. Gap. Let's see how this looks like. Okay. Okay, it doesn't go back longer, sadly. Let me check. Okay, so when we look at the gaps, so this is a gap indicator. First of all, when we look at the size of the gap, so here's a downside gap, acceleration to the downside. This was exactly kind of the same size, 500 points, and we closed it in a very, very short amount of time. Okay, so maybe let's talk about a negative case here. So we had a gap there of 500 points, and this was last year April when this tariff thing happened. Okay, huge gap to the downside, acceleration to the downside as well. But what happened in terms of time? In 7 days, in 1 week, the gap was attempted to close, and it was closed for the most part. Okay, at least for 50%, the gap was closed. And that's, I think, the kind of what will happen here as well, that gaps have the tendency to be closed, and it's not easy to maintain. Okay, and especially these big gaps. In terms of size, this is, in my opinion, one of the bigger gaps I've seen. In this case, they say it's 630 points. Yeah, you get the story. My opinion was relatively simple. Gap confirmed here. Basically when we look at the price action right now, let's dive into this. It's quite interesting, I believe. We had this big gap here. So we formed a low and we confirmed the low, okay, multiple times. So this is a demand zone. And this actually then is quite clear. If there's demand, we move higher. Okay, so that's quite clear. But again, I think that we will have something maximum like this, okay, in terms of time. When we talk about in terms of time, yeah, I think that ideally we will go there next Tuesday, Wednesday, we will close the gap. That's my play, okay? So my play next week on the Nasdaq will be on the short side, in terms of filling that gap, and I'm expecting next week, hopefully not the Monday, but hopefully Tuesday, Wednesday, really dynamics to the downside, okay? And this could be a beautiful trade. Beautiful trade of, let's say, 600, 700 points. with dynamics and momentum, hopefully to the downside. So this is kind of what I'm hoping for. In the end, guys, the most important rule is really trade what you see and don't fight it. So if we move up, don't go all in on the short side, obviously, but try to jump on when there's momentum. Okay, and that's kind of the summary for the equity markets. I would like to talk Bitcoin a little bit and gold as well, but let's start with Bitcoin. Bitcoin looks quite okay. I mean, game plan is still there. I hope that we can go to the 80K. Would be beautiful. So this would mean that we would run into this kind of supply zone here, and ideally we move up a little bit to this 80K zone. Ethereum is a little bit weaker, but I still believe that we can go to 2,500-ish, ideally 2,800. Solana looked weaker, is weaker, but the kind of trade what we had worked out here is still in place. We have here a demand zone. If this demand zone here on the lower end is active, we got an opportunity of a 2.8 plus reward risk. Okay, that's my take here. Other than that, what we've talked about, what the crowd was talking about was a lot of Tau, but Tau is not my specialty, so I don't really want to talk about it. Aave, I think, is quite interesting because dropped now as well quite significantly from last summer's high to right now where we are. We're down 76%. So quite massive. If we take out that $80 low, we will go to the $50, and then we could maybe think about buying a little bit and start DCAing, because this is maximum pain. Other news from my end, I've bought new Casper miners, 10 piece. Let's see how it goes. Let's see. All right, guys. So that's my update basically for the weekend. From the week, I will do one more video about what it means to get brought live by a prop firm. I will do this right now after this one, and wishing you a beautiful day, beautiful weekend. All the best. Ciao.